Hello Nasdaq followers and welcome to another episode of Sector Talks. Here to talk to me about the energy outlook today is Tamar, Essner, Energy Director of IR Intelligence. Thank you so much for joining us.
Thanks for having me.
Could you start by telling us a little bit about the current tone of the energy markets?
The energy markets are looking a lot better than we did last year. The energy sector as a whole has underperformed the broader markets for 6 out of the last 7 years. So we have a tough record, but we're one of the better performing sectors in the market so far this year. Oil prices are up about 15%. Energy stocks have been coming out with their fourth quarter earnings results, and even though oil prices were down substantially during the fourth quarter, these companies are still managing to report earnings that are better than most analysts had been expecting, and a lot of them are showing quarter-over-quarter growth and moving into free cash flow territory. So overall, the outlook right now is good. We have to see if it's sustainable over the course of the year.
What are some potential headwinds and tailwinds you're seeing in this complex?
Headwinds for the market remain the ongoing concerns from a trade war perspective. So really that macro overhang has really caused a lot of people in the energy markets to start to question what is demand going to be over the course of the year. And we think that there's a possibility for the pace of demand growth to slow down, and that would definitely be a headwind for the market, as well as if the Federal Reserve continues with its pace of interest rate hikes, although recent commentary from them suggests that they might not do that. Tailwinds for the market would be some of the geopolitical crises going on right now. So with sanctions on Venezuelan oil and sanctions on Iranian oil, that's been curtailing the supply to market. So that potentially could be a tailwind in terms of loss of supply over time can be supportive on the macro for oil prices, which would be beneficial for the energy equities as well.
And are there any near-term catalysts on the horizon?
If we get a trade deal coming up, that would definitely be a catalyst. Any data that comes out on a weekly basis that shows that inventories in the U.S. are coming down, that would be a positive catalyst. We expect that that might happen in the second half of the year as demand starts to increase. Saudi Arabia has been reducing the oil shipments to the U.S., so over time that should pan out in constructive data in the U.S. As well as the rig count. So if we start to see that production in the U.S. comes down or doesn't grow by as much as it grew last year, that would also be a positive upcoming catalyst.
Looking out longer term, what are some of the prospects that we're seeing in the energy complex?
Well, a lot of people are starting to question that the issue of demand over time. The renewable community, renewable sources of energy have gotten a lot more competitive and economic. So those pose existential threats for oil over time as people start to transition to electric vehicles. But there have been a lot of impediments to that process, and there's a lot of other uses for energy, particularly in the plastics and petrochemical area. So longer term, it's really this big question of, do we have peak demand, and if we do, when is that, and does oil demand start to fall drastically from there, or do we just level off, in which case it would be a pretty benign environment for oil. So it's a big question. It would be a benign outlook or really demand destructive. So those are the big longer term issues that investors are looking at.
Great. Thank you, Tamar. Thank you for the energy outlook and the insight. Nasdaq followers, please stay tuned for more coverage right here from the Trade Talks channel for both